What's up, everybody? This is Sunko the Korean Bro. Today is 2022, October 31st. Uh, I found something unfortunate. Unfortunately, I found that this past 2 weeks, um, videos that I've been recording, it was all muted. Um, that's what I found just today. Uh, like I thought that I prepared all the setup, but then hmm, I didn't even look at the videos that I've been recording, so um, all the things that I put an effort into in the past 2 weeks, it's all been to no avail. But the good point is I found it, so from now on I'll be able to record it well and be able to speak well, probably. Okay, anyway, today is a day behind. Um, the day that we will have interest rate um, tomorrow. So what I'm going to see first is economic calendar. Hmm, let's see. Mm, okay, as I've guessed, tomorrow we have. Oh, it's not tomorrow. Tomorrow we have job openings and ISM manufacturing PMI. On Wednesday we have a big deal FOMC statement. We had a CPI from Eurozone today. What does CPI stands for? Let's see again. The Consumer Price Index measures the change in the price of goods and services from the perspective of the consumer. It is a key way to measure changes in purchasing trends and inflation. Key way to measure changes in purchasing trends and inflation. A higher than expected rating should be taken as positive, bullish for the euro, while a lower than expected reading should be taken as negative, bearish for the euro. So, CPI from euro. Hmm. Let's see it one more time. It's higher than forecasted amount. So higher means as positive bullish for euro, while the lower than expected reading should be taken as negative bullish for euro. Hmm. Okay, and that's it with economic calendar, and let's go to mm, the Malifaux. Okay. Okay, got let's see what articles we have tonight. Got 1,500. These two stocks could be bargain buys for 2022 and beyond. What recession? This resilient Warren Buffett stock just keeps plugging along. Ultra popular stocks are more tricked than tricked. Spotify is still losing money. Should investors be concerned? Okay. Should you buy stocks right now? Here's Warren Buffett advice. Three supercharged growth stocks set to soar 89% to 216% according to Wall Street. Two stocks I wouldn't touch with a 10-foot pole and what to buy instead. 57 billion reasons to avoid Boeing stock. Oh, wow. Okay, first things first. Okay, after a challenging year or more, Teladoc may be showing signs of recovery. Teladoc, okay. Let's look at the price of Teladoc first. Teladoc. Despite pandemic disruptions, Intuitive Surgical's core business remains rock solid. Both healthcare companies have carved out leading positions in their respective areas. These stocks are both trading down by double digits over the past year, but there's much more for investors to take into account. Okay, there's much more for investors to take into account. Okay, while the ongoing stock market volatility has rocked nearly every social sector lately, investors with a long-term buy and hold perspective can still find opportunities amid the storm. Amid the storm, okay, amid the storm. The reality is that the most momentous investors' returns usually occur on a few days of the year. No one, and I mean no one, knows when those days will be for investors looking to build upon and compound their portfolio gains through the years. This is best accomplished by staying in the market and consistently investing through its highs and lows, rather than jumping in and out and hopes timing the right moment to buy or sell a stock. If you're in the position to keep building your portfolio in the current market and have a $1,500 to put into stocks, money you don't need to pay bills or other expenses, here are two top healthcare stocks to take a second look at now. Teladoc Health, okay. It hasn't been an easy time for Teladoc Health investors over the past year or so, not by a long shot. As a shareholder of Teladoc myself, himself, author, article, author of article, I feel that the pain of the stock's downfall as much as anyone. From the company's rapid ascent in the earlier days of the pandemic to the stock's equally momentous retreat with other growth stocks, investors have had to exert particular patience with this stock. Okay. Hmm. However, if the company's recent earnings report is any indication, we could be seeing the beginning of Teladoc's much-awaited recovery. In the third quarter, Teladoc reported that its revenue grew 17% from the year-ago period, while total visits on its platform jumped 14% on a year-over-year basis. Okay. Although the company still reported a net loss of roughly $74 million, it's worth noting that this is a considerable improvement on a sequential basis. The company remains an unequivocal leader in the global telehealth market, a space on track to hit a valuation of $787 billion by the year 2028. Okay, 6 years from now. The combination of an aging population coupled with the convenience and affordability that telehealth options provide make Teladoc's platform an indispensable fixture in the modern age and well beyond. And while a single quarter alone shouldn't cause you to buy or sell a stock, the company's top and bottom line bit in its third quarter report could pose a short of the journey back that investors like myself have been waiting for as it gradually recovers from the financial impact of the Livongo acquisition, integrates these viruses various systems into its business operations for the long term. Okay, and what else we have? Intuitive Surgical has managed to remain in firm control of the lion's share of the global surgical robotics market for nearly 3 decades and counting. The most recent estimate placed Intuitive Surgical's market share at a whopping 80%. This fact, coupled with the company's incredible history of top and bottom line growth, has made Intuitive Surgical one of these rock solid healthcare stocks investors can buy and hold for many years. Top and bottom line growth has made Intuitive Surgical one of those rock solid healthcare stocks investors can buy and hold for many years. What recession? This resilient Warren Buffett stock just keeps plugging along. American Express continues to see robust levels of spending. American Express, okay. Buffett's company Berkshire Hathaway has owned this stock since 1993. One of Warren Buffett's favorite stocks just reaffirmed its guidance for the full year and for 2023 and 2024. Many economists and experts project some level of recession in 2023, which is expected to negatively impact the future earnings of many companies. So it's not just this year, not just the end of this year, but also next year we'll have recession, and this recession is going to last for a long time. That's what experts say. Okay, but you wouldn't want a recession is right around the bend by looking at the performance of American Express. The payments and card services giant is a longtime favorite of legendary investor Warren Buffett. As a long-time holding in the large equities portfolio of the conglomerate that Buffett runs, Berkshire Hathaway. Not only did AMX beat earnings estimate in the third quarter, but also reaffirmed its outlook for the full year. Strong activity leading to strong guidance. Hmm. From what I see, the companies that he loves all has some perspective in common. It doesn't look like special on the outside, but it's really strong on the inside. So there it is. Like a characteristic he looks for in many of his investments. You can't always see it, but a powerful brand can be tremendously valuable to a business. Yeah. In the third quarter, MX added 3.3 million new cards, the highest level since the pandemic began, and particularly in its fee-based products, where members pay annual membership fees. New cars taken out by millennial and Gen Z customers made up 60% of the new car growth in the quarter, showing just how much the brand is resonating with younger customers that could prove to have a higher lifetime value. So for younger generation, brand means a lot. So it's higher lifetime value. Mm. Credit perspective. Okay. MX large scale payments network, a premium loan book with a high quality customer base. A premium loan book with a high quality customer base and a strong brand are just a few of the reasons this long time Buffett stock can keep plugging along despite what appears to be an uncertain economic outlook. Okay. They got a large scale payments, uh, a premium loan book with high quality, and a strong brand. They are like the three components that um, makes up of the reason why Buffett stock can keep plugging along. Okay, let's go over to next one. Three ultra popular stocks that are more trick than trick. A bear market declines are an ideal opportunity for investors to put their money to work. However, not every perceived to be cheap stock is going to be a winner. These popular stocks are rife with red flags. Bad Bath and Beyond, SNDL. The third ultra popular stock that's proved to be more trick than trick is a Canadian marijuana stock, SNDL. If the name doesn't ring a bell, it could be because the company recently changed its name to SNDL from a SNDL growers. There are three reasons investors have flocked to SNDL over the past couple of years. The expected growth of the Canadian pot industry. So, unlike Korea, where pot is abandoned, uh, in Canada and some part of the states, um, pot is legal. So expected growth of pot industry, expected growth of the Canadian pot industry can be found, and SNDO is on in line with that. SNDL's a large cash position and SNDL's relatively high short interest, which has made it a popular short squeeze candidate. However, none of these factors overshadow the company's poor operating performance or its questionable management team. Okay, they had a lot of good advantage at first, but then because of poor management, they're like had to start from the scratch. Okay. Hmm. So this marijuana stock is what author of this article suggests. Okay, next here's Warren Buffett's advice: don't let the bear market scare you away from investing in stocks. Focus on businesses with strong competitive advantage that are available at attractive valuations. So, uh, we're not supposed to look at price level. What we have to look at is whether business itself is strong or not, and um, that's where everything starts. So if the business performs well, the stock will eventually perform well also. Okay. It's Halloween and the scariest thing around isn't a haunted house or a trick or treater, it's the stock market. Many investors are afraid they've seen their portfolios sink like a brick this year. Several of the biggest companies reported dismal quarterly upbeat in recent days. Some argue that buying stocks sooner rather than later is the smart thing to do. Others maintain that the worst is yet to come, especially with a potential recession looming. Should you buy stocks right now? Here's Warren Buffett's advice. Buffett wrote in a 1986 letter to Berkshire Hathaway shareholders that he tries to be fearful when others are greedy, and to be greedy only when others are fearful. He absolutely wouldn't recommend that you let the current bear market scare you away from investing. One key reason behind Buffett's view is that bear markets present great opportunities to buy stocks at attractive prices. In 2018, he stated in an interview with CNBC, the best chance to deploy capital is when things are going down. The iconic investors wrote in his 2008 letter to Berkshire shareholders, whether we're talking about stocks or stocks. Stocks or stocks. I like buying quality merchandise when it is marked down. You might be tempted, though, to wait to try to buy stocks at even lower prices than you can get now. Buffett would almost certainly push back against that approach. In a speech he gave at Columbia University in 2009, he said, don't passive something that is attractive today because you think you will find something better tomorrow. It's also prudent to heed Buffett's warning about clinging to cash. He once stated, today people who hold cash equivalents feel comfortable. They shouldn't. They have opted for a terrible long-term asset, one that pays virtually nothing and is starting to depreciate in value. Those are especially applicable words in today's high inflation environment. So if you just hold cash, um, it is certain to depreciate in value. It is certain to depreciate in value. So if you just feel holding the cash is comfortable, you shouldn't. Uh, it's going to depreciate in value. So yeah, here it is. Buffett would probably first emphasize focusing on the business rather than the stock itself. So focus on business rather than stock itself. Okay. Not stock pickers, we're business pickers, okay? Not stock pickers, we're business pickers. Focus on business. Business, okay? How much an industry is going to affect society. The key to investing is not assessing how much industry is going to affect society or how much it will grow, but rather determining the competitive advantage of any given company, and above all, the durability of that advantage. Not assessing how much an industry is going to affect society or how much it will grow, rather determining the competitive advantage of any given company and above all, the durability of that advantage. Of course, Buffett also thinks valuations are important. He once said, for the investor, a too high purchase price for a stock of an asset company can undo the effects of subsequent decade of a favorable business developments. So, once again, let's summarize. It's not about price level. It's not about uh, how company mm, can affect society or how much it will grow. What we have to focus on is on business itself. The strong competitive advantage of the company and durability of that company. Okay. Two stocks I wouldn't touch with a 10-foot pole and what to buy instead. Bed Bath & Beyond and Hasbro stocks are not as cheap as they look. Both companies are struggling to keep up with competitors in the bear market. Trading up to better quality stocks can pay a big dividends down the road. Why would he buy? Why would he avoid? Shares of Bed Bath & Beyond are down about 65% this year. Just because it this this price level is attractive, you shouldn't buy it. Focus on business. Okay. Um, are nearly at penny stock status. The current quote of $4.59 might look like a value on the surface, but the company's performance suggests it operates with an outdated store model. It operates with an outdated store model. So a model um, that's been used a long time ago. That e-commerce entrants and other world-class retailers can disrupt. The company posted a disastrous year-over-year sales decline of 28% last quarter. However, the company struggles go back much further. After posting steady growth through 2015, sales suddenly flattened before collapsing during the pandemic. When customers started shopping online, the shift highlighted a civil weakness against the emerging threat of new entrants to have the market like Wayfair, which now commands twice the market share in home goods as Bed Bath & Beyond, according to IPD data. Hasbro, and Bed and Bath are the ones that people have to avoid. Okay, let's go to marketbeat.com. Okay. What interesting articles do you have? Mm, Morgan Stanley still has a double-digit upside. Okay. Let's see. Let's look at a Meta platform first. Okay, just to remind, one thing that was clear. One thing was really clear when I was reading an article before. What I have to focus on is on business itself, not price level. So the fact that a Meta platform uh, is bearish shouldn't mean anything different to me. Mm. What I have to focus on the business is metaverse business of theirs attractive. Okay, let's see. Advertising spend is falling. Okay, but user engagement are rose as nearly 3.7 billion people a month use Meta platforms, family of apps including Facebook, Messenger, Instagram, and WhatsApp. So a lot of people are using. CEO Zuckerberg continues to invest heavily in the metaverse despite weak macroeconomic conditions, slowdowns to its tops and bottom lines. Although we have hardships, macroeconomic level, they still continue to invest heavily in the metaverse. Okay, Meta is literally going all in on the metaverse. Investors are nervous as it's still a proof of concept money peaked. So investors are worried about it because like he's like all in on metaverse and hmm, its WhatsApp applications and paid messaging has yet to be fully monetized, but has more than 2 billion people using it daily. Meta shares are down. Meta shares are down on the year and trade below 13 times forward earnings. A share price is not seen since 2016. Okay. Mm. Below 13 times. Okay. Meta continues to have intrinsic value. The further shares think as the company has $42 billion in cash and marketable securities. Social media developer Meta Platform stock took a minus 24% cliff dive after its quarter third 2022 earnings miss. While the earnings miss had investors concerned, revenues came in better than expected by nearly $300 million. Okay, although the earnings are expected, the earnings miss have investors concerned. Its revenue came in better than expected. Okay, the strong US dollar make a $1.79 billion impact on revenues and expected to make a minus 7% impact in the next quarter. Engagements were strong across all its applications. Perhaps the biggest concern driving shares lower is the unfettered determination of CEO Mark Zuckerberg to literally go on metaverse investments. While Mr. Market didn't mind the money losing investment, when indexes were hitting highs in a raging bull market, it is extremely upset as the rate of spending continues higher in light of weakening macroeconomic headwind in the bear market. Okay. Hmm. See. We got FV2 FV. FV stock is down by 3% after it posted mixed earnings report, but it's still a solid long-term investment. The earnings report is a reminder that the company will lose U.S. Patent protection for Humira in 2023. FV expects revenues and pick up some slack until other candidates are approved. Let's go to Yahoo Finance. Let's look for some interesting articles. Okay. Hmm. Stocks sleep with Fed earnings, jobs data, and that. Morgan Stanley's Wilson ain't a Fed tightening nearing. Load up, says Gene Kramer about these two airline stocks. Okay, let's just read three articles and then um let's put an end to this YouTube live. Okay. First we have a stock market news live update stocks. Sleep with Fed earnings jobs data on deck. Okay, tomorrow, not tomorrow, on Wednesday we'll have an interest rate um announcement. So U.S. stocks led Monday morning to start a busy week marked by Fed policy, earnings, and jobs data. The S&P 500 declined 0.7%, while the Dow Jones Industrial Average raised 200 points, or 0.6%. The technology-heavy Nasdaq Composite fell by roughly the same margin. Treasuries ascended again, holding above 4%. Okay, here it is. The Federal Reserve's next policy announcement Wednesday. The October's monthly employment report, set for release Friday, will determine whether the tailwind will continue pushing stocks forward through the rest of 2022. Hmm. Hmm. I didn't put really much importance on jobs report, but it seems that jobs report is as important as FOMC uh, announcement on interest rate hike. Mm. Bulls and Meta stock have one big problem: Mark Zuckerberg. Okay, Mark Zuckerberg built Meta platforms into one of the biggest companies in the world, but some investors now see him as an obstacle to the stock recovering from a historic sell-off. Okay, the Facebook parent has tumbled 72% this year, with last week's earnings pushing the shares to their lowest since 2016. The biggest way on stock Meta is spending billions of dollars to develop the metaverse, an immersive virtual world that the chief executive officer has long believed represents the future of computing. So, apparently, CEO Mark Zuckerberg believes that the future of computing is metaverse, but it doesn't really give confidence to investors. So, a lot of investors sell off their stock. Hmm. Shares fell 4.4% on Monday, participating in a broad decline for technology and internet stocks. Hmm. The strategy is curbing earnings even as the company acknowledged it's unlikely to deliver significant revenues for years. While investors may long for Meta to renew its focus on selling ads to its billions of social media users, the company structure gives Zuckerberg total control. So there's little they can do but what they already been doing. So most of things are handled by Mark Zuckerberg. So investors want the company to focus on advertisement, not metaverse. His tone deaf to what the owners of the company want. Mm. Outside of himself, he said David Kent's chief investment officer and Matrix Asset rises. The stock could double in a year with a better management, with management that is more focused on shareholders. Yeah, like overall, their financial related stats are all sound and effective. Yeah. We believe that our capital structure is in the best interest of our shareholders and that our current corporate governance structure is sound and effective. Okay, next one. The number of millionaires will spike by 40% globally in the next 5 years. But most won't come from the US. Here's a country to watch and how to invest in it. Let's see. The number of millionaires is on the rise with 40% more expected to be made worldwide in the next 5 years, according to a new report. China. Okay. Yet, is the report perhaps a tad optimistic? Growth in China has its associated risk, especially given geopolitical tensions with the US. The 2024 deadline for certain Chinese stocks to be delisted from Wall Street. Meanwhile, the rivalries between the two nations in tech, energy, and telecom continue unabated. Although there's like a strong lockdown here, lockdown because of COVID and China, they are struggling with economic development and um, technical advancement, but uh, developing markets are likely to see a recovery. Mm. Some Chinese ETFs to consider. If you want to invest in Chinese exchange traded funds, low prices makes this an opportune time. Given the Chinese economic size, it's likely to recover at a more rapid pace than other developing countries. Yeah. So, mm, so if I were to, not if I were to, I'd be investing only a small amount of money on China ETF, probably. Okay, this is it for today, and I'm gonna see you tomorrow. Okay, bye bye.